Looking for a degree program that rewards you for what you already know? At WGU, all of our bachelor's and master's programs are competency-based, allowing you to progress at your own pace. Washingtonians know how valuable time and money are, and so do we. At WGU, your hard work and experience can help you finish your degree faster and for less. Join a community of driven professionals from across the DMV who are unlocking new career opportunities today. See how your knowledge can give you an edge at wgu.edu.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson. Now at 3 o'clock. It was great hearing Rick Caruso on the Guy Benson Show this afternoon. And we'll do all this just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We are live on the air here, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Breaking news this afternoon, President Trump says he's doubling the tariff on imported steel, announcing just moments ago that the move would add more protection to the domestic steel industry. He said that we're bringing it up from 25%, doubling it to 50%. The president speaking at a U.S. steel workers rally just a few moments ago. Global prices for steel have been falling in recent months, making it easier for steel buyers to pay the existing duty on imports and still acquire steel at a discount to domestic prices. All of this as Nippon Steel gets set to basically merge with U.S. Steel. Stocks, meanwhile, did rebound from early losses today, and this capped off a volatile but strong month of May. If you sold in May and went away, it was not such a good idea this time. We just saw the Dow rise 54 points, settling at 42,270. The S&P 500 slipped a half point at 5,912. The NASDAQ down 62 points at 19,114. We did see a pretty decent rally for the month of May. In fact, for the S&P 500 was the best month of May since 1990. We'll be taking a closer look at that here coming up shortly. Trade talks between the U.S. and China a bit stalled, according to the Treasury Secretary Scott Bessent on Fox News. The Treasury Secretary said a call between the president and the Chinese leader is needed to reach a deal. Looks like there's some more drama involving China today as well regarding the tech scene. We'll discuss that coming up here shortly with China expert Gordon Chang, Gatestone Institute senior fellow, and he'll be joining us on the latest news on China. Also discuss the latest news on tariffs, the bond market, stocks, and the economy, gold, and currencies later this hour with Axel Merck, economist Axel Merck, who's the president and chief investment officer of Merck Investments, author of the book Sustainable Wealth. President Trump earlier today declared that China has totally violated its agreement against the U.S. on trade just 2 weeks after the U.S. and China reached a tentative deal, raising concerns that the trade war will continue to rattle the global economy. A lot to talk about this hour. In fact, right now, on your money, the markets, the economy, inflation, the breaking news this afternoon on the whole works. I'm delighted to say we're joined now by a giant in the financial world, the one and only Steve Forbes, editor-in-chief of Forbes Media, which includes Forbes magazine, former Republican presidential candidate, author of numerous books, including Inflation, What It Is, Why It Is Bad, and How to Fix It. Steve Forbes, thank you very much for coming to the line here this afternoon.
Good to be with you. Thank you.
Thank you very much. And also we got a new reading on inflation today, which came in cooler than most analysts had expected. So let's get your reaction to that news and wrapping up the month of May here on Wall Street.
Well, you're right when you said beforehand that if you'd gone or sold and gone away in May, you would have ended up with a lot of unnecessary losses or lost opportunities. And the income was better. The income number was better than anticipated. And the price rises were not quite as bad. But prices are still rising in various areas of the economy. And I just hope the Federal Reserve recognizes that what's happened with commodities, especially the gold price, presages is a warning of future inflation. That means that they should get away from their idea that prosperity caused inflation and step back and let the economy take care of itself instead of trying to depress economic activity, which they think is the way you fight inflation, which isn't. You know, in the old days in medicine, the doctors would bleed you. That, of course, got rid of the pain and suffering because it got rid of the patient. And the Federal Reserve still has that mentality today. So it's economic malpractice. So the bottom line is I think the economy is better than what the Fed thinks it is, but the Fed still is guilty of economic malpractice.
On the Air Live with Steve Forbes, that inflation reading in the form of the PCE index, which we're told is the Fed's favorite inflation gauge, rose 0.1% last month, better than most analysts had expected. Inflation was flat in the month of April, so the cost of living barely rose in April. Is the inflation genie back in the bottle here?
It's temporarily back on in the bottle. However, the Federal Reserve is letting the dollar weaken, which means we're going to get monetary inflation in the future. Weaker dollar always leads to higher prices. And then, of course, we've got still the uncertainty about tariffs. That was not good news today about China. And so who knows what's going to happen there. Doubling the steel tariff will, of course, raise prices on a lot of manufactured goods. So it's still a murky picture. But again, the Federal Reserve, I think, is going to be an obstacle to fully recovering from inflation because it's letting the dollar weaken. It shouldn't do that.
On the Air Live with Steve Forbes on that announcement this afternoon regarding Nippon Steel and U.S. Steel. Looks like the steel stocks moved higher in after-hours trading today. U.S. Steel stock, which we haven't talked about in years. X is the famous symbol on that one, has been moving up lately. What do you make of this deal and the president's announcement this afternoon, specifically related to tariffs on steel?
Well, I think the tariff announcement is going to end up doing more harm than good. But allowing Nippon Steel to ally itself with U.S. Steel in a very convoluted way just for political reasons, nothing to do with national security or anything else. They had to go through these conniptions, this kabuki dance, and then a pretend, that they call a partnership, golden share, and all that kind of stuff to make it politically palatable to some politicians. But Nippon is going to be providing literally billions of dollars of needed capital for U.S. Steel. That's why U.S. Steel and the workers at U.S. Steel, not the union leaders, but the workers, wanted something done because they could see that the world was going to pass U.S. Steel by and it would become, in effect, a war to the government. And it could even have gone under. So this way it gets a much-needed infusion, long-term infusion of capital from Nippon Steel, which is good for our steel industry. We need the most modern technology possible, and this will get U.S. Steel back on its feet in terms of technological capabilities and having the most modern equipment possible.
On the Air Live with Steve Forbes, big event happening today, an economic forum at the Ronald Reagan Presidential Foundation Library in Simi Valley. You're no stranger there. I remember when you had the book signing there on your book, Money, How the Destruction of the Dollar Threatens the Global Economy and What We Can Do About It. I remember meeting you there at the book signing. And today, among the speakers, Jamie Dimon, the head of J.P. Morgan Chase, the largest bank in the country, fired off a warning about the bond market, telling regulators they will panic when it happens. He said, you are going to see a crack in the bond market. And he says it's going to happen. The normally boring bond market getting a lot of attention these days. We did see that spike in bond yields. It looks like they've come back down here now with the yield on the 10-year note back down to 4.41%. But what's your reaction to his comments, and what do you see here on that important bond yield that we're watching?
Well, that's one of the big uncertainties out there, is that with the amount of debt that is coming from Washington, plus they have to roll over existing debt. So when a bond comes due, they've got to go out and reborrow the money. So you have literally trillions of dollars coming out of the market this year, both renewals and new debt, and that's got the markets worried. The bond auctions of late haven't been that buoyant, and buyers may say enough, or have a glut, which means higher interest rates. And that's, again, why I hope the Senate, when they take up the big, beautiful bill that the House passed, I love that name. Who else would have put a name beautiful in a piece of legislation? But the Senate's got to, I think, increase the tax cuts on the personal level and corporate level, reducing the tax rates, not giveaways to special interest, but reducing the tax rates. Because the only way we're going to get out of this is with a buoyant economy. If we have a really good economy, revenues go up. And one of the things to keep in mind is that the assumption that the government uses for future growth is far below our historic average. So if we get these uncertainties out of the way, the U.S. economy once again gets its historic growth rates, which we achieved for almost 200 years. You'll see revenues come in at a much better level than what's now being anticipated, which the markets would most welcome. We also have a world, Frank, out there that is also grossly in debt. Japan's national debt, you think of Japan as being a very sober-minded economy. It's the third or fourth largest in the world, depending on the day of the week. But Japan's national debt as a proportion of its economy is twice that of the United States. And you have other countries that are very heavily indebted. So not to bore your listeners, but the world global debt, total indebtedness, is now over $300 trillion, which is such a big number we can't imagine it. But that's 3 times the size of the global economy. And so if we don't get this growth going here and then overseas, we're going to have real debt crisis, and governments are going to resort to inflation as a way of dealing with their debts, as happened in the past. You can't pay it, so you devalue your currency and reduce the debt that way through inflation.
On the air live with Steve Forbes, and drama continues in Washington. The big, beautiful bill passed by just one vote in the House over the past week, and now there's new drama in the Senate. Is there a chance that this won't go through? What's the latest information you're getting there?
Well, there is a danger that because of all the conflicting aims, people want more cuts in spending. Others want deeper cuts in tax rates, which I think would be good for the economy, including capital gains. This is one of the things, by the way, I don't understand about the Republicans, why they didn't include a cut in the capital gains taxes. Every time you reduce it, every single time, you get more government revenue right away as people realize existing gains, since the penalty of realizing those gains isn't as high as it was before. So that's instant found money, but they haven't glommed on to taking that up yet. But in terms of the bill, I think the president's going to be having to work full time to make sure this bill doesn't flounder in the Senate. And we're going to have to, the Mike Johnson, the Speaker of the House, who's probably the foremost, as people have said, the cat herder in the country, herding cats.
Yeah.
We're going to need that. We're going to need that on the Senate side, because if we don't get the renewal of the tax cuts of 2017, then we're going to have a severe recession as typical households find their tax bills going up $2,000 to $3,000, and for Californians, probably between $3,000 and $4,000. You do that, and you've got a big, bad economy.
That's a big part of the uncertainty puzzle, and I kind of latched onto this after attending one of the business conferences. The president has unleashed Ambassador tariffs around the world. Based on what we know at this point, how this whole tariff story is playing out, obviously a lot of uncertainty, especially as it relates to China, as we heard just today. But the list goes on. Is it going to be day to day, month to month? How's this tariff situation going to finally settle, you think?
Well, we've got two things going on at once. One is the deadline in early July, the original extension in April for most of the tariffs, which the president announced on April 2nd. So hopefully they keep announcing, or officials keep announcing, that we've got deals just around the corner. I think the markets want to see the beef. They want to see real deals. What are we talking about here? And then you have what happened in the courts this week, a federal court which is in charge of trade disputes, the Court of International Trade. That court ruled decisively against the president's imposition of tariffs, saying it's based. He does not have the authority to do it that way. And by the way, in the first term, President Trump's tariffs did go through an established process. He just didn't snap his fingers. You had to go through hearings and everything. So there are mechanisms for tariffs. But what he did, especially on April 2nd, the court found was unconstitutional. And I think by the time it makes it to the Supreme Court, which will probably be sooner rather than later, I think the Supremes are going to rule that the tariffs are unconstitutional. So I hope by the 4th of July we get all of this settled so people know what the rules of the road are. And also by the 4th of July, hopefully they'll have a tax bill so we'll know, again, what the rules are in terms of potential tax liabilities and incentives. So 4th of July is not going to be just traditional fireworks. It's going to be, we're going to have an economy that's going to take off like a rocket.
Nervousness also on the geopolitical front with Israel coming under attack again this past week. And looks like President Trump and Vladimir Putin locking horns as well. And the list goes on. If you could take us around the world here with the latest headlines and give us your assessment of where things stand in the Middle East and with Russia and Ukraine, also the U.S. and Europe on the ongoing trade issues. Give us a lot going on here.
There is indeed. And on the Middle East, I think the Israelis are going to continue to move to try to really do in Hamas and Gaza. And in terms of Iran, which is the big issue, Iran's nuclear program, which is on the verge of getting a nuclear device, I found it very interesting that the head of Saudi Arabia, the man who really runs the country, made it quite clear to Iran that if they don't agree to dismantle their nuclear program, military action will be taken. And I hope the president is serious because is negotiating with the mullahs. The mullahs feel that if they can drag those negotiations out, make a lot of promises they have no intention of keeping, maybe do some dismantlement, but not too much, that they can wait President Trump out, and go full bore when a new administration comes into power. So I think you're going to, at some point, the Israelis are going to decide if we don't get an agreement with Iran, that they're going to take military action, which is who knows what the repercussions of that will be. So in terms of that, it's I don't think those negotiations are going to succeed in the way they should. The mullahs are not going to agree the way Libya did 20 years ago to truly dismantle its nuclear program. So that's a worrisome thing. Now, in Ukraine, the reason why Vladimir Putin is thumbing his nose at President Trump is that Putin believes he's going to win this war. He's called up another 50,000 troops. The Russian weapons industry is going at full bore. Very different situation from when it was when the war began a little over 3 years ago. And they think that they can gain a lot of territory against Ukraine and perhaps win this war. And then there's General Petraeus, who headed the CIA and also our military for a while, warned that if he takes a big chunk of Ukraine, he's going to move against the country of Lithuania. The Baltic states, Lithuania, Latvia, Estonia, several of them have very large Russian minorities, and Putin may start playing games with that. Those countries are members of NATO. And if the U.S. is not seen, Frank, as having real credibility, Putin's going to risk, making military moves against Lithuania and other countries, and feeling that the U.S. at the end will cave. So just as President Biden's disastrous withdrawal from Afghanistan let Putin believe that he could move with impunity against Ukraine, so too President Trump has got to, I think, instead of trying to put sanctions on Russia, which Putin believes he can always find ways around, he's got to step up massive military weapons deliveries to Ukraine so that Putin doesn't get the idea that he can win this war and that he would best off taking what he can at the negotiating table.
On the Live with Steve Forbes, and last but not least, the guy who tops the Forbes list of billionaires, Elon Musk, announcing he's stepping away from the government now, Doge, and still supporting the efforts, but now concentrating on his enterprises, including Tesla and SpaceX and so forth. Tell us about Elon Musk and his role in the Trump administration, which looks like officially has throttled back as of today.
I think Elon Musk has gotten a very real lesson in Washington that it's a universe that defies logic and does not do often the things that it should do. He made a very good faith effort, and yes, you can criticize he may have moved too fast here or not fast enough there, But what he uncovered in terms of real waste, fraud, and abuse, the fact the Treasury Department can issue $7 trillion of checks each year and have no real knowledge the way a business would where that money goes was astonishing. And he's pointed out some cuts that do not harm people who need a safety net, despite what the Democrats say. He's pointed out some real reductions. Now, unfortunately, as we saw in the House bill, the big, beautiful bill that came out of the House, that unfortunately did not contain the kind of reductions that you would have expected. And I think that's one reason why he's leaving the government sort of chastened. But hopefully the DOGE effort will continue, and they just got to chip away. But again, the key thing is getting big economic growth, and that means not only reducing the waste, fraud, and abuse, which is mammoth, he pointed that out, but also getting the kind of tax cuts and individuals and businesses the way Ronald Reagan did in the past, the way the Trump tax bill of 2017 did, despite what the Democrats say about it, the way the Kennedy tax cuts did back in the 1960s. We need growth. That solves a lot of problems. When your income, when your assets are growing faster than your liabilities. Very basic.
It looks like the help wanted sign is up at Doge. You want to take the job?
My role as agitator. I'll leave the headaches and the heartaches and the ulcers to others. Maybe one of Elon Musk's 14 kids can take it on, but no.
Looking for a degree program that rewards you for what you already know? At WGU, all of our bachelor's and master's programs are competency-based, allowing you to progress at your own pace. Washingtonians know how valuable time and money are, and so do we. At WGU, your hard work and experience can help you finish your degree faster and for less. Join a community of driven professionals from across the DMV who are unlocking new career opportunities today. See how your knowledge can give you an edge at wgu.edu.
No Contest Wrestling. O'Shea Jackson Jr. and TJ Jefferson with the biggest names in the game.
Ricky Saints is in the house, everybody. NXT North American Champion, baby.
How you feeling right now, man?
I feel great.
Jay Uso. What's going on, man?
A lot of heavy days, but it's okay, man. It's part of the game.
They know who they are, bro. And you know who I am.
TJ, can you tell them where to find us?
I mean, why else are we here?
You can always find us No Contest Wrestling. Check us out.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
He's put in a very good team there. He's put in a very good team, and I think they're capable people who can continue the work if politically they're allowed to do so, if they have the real backing of the White House.
Terrific. Steve Forbes, thank you very much for wrapping up this big week. I look forward to our next conversation and always greatly appreciated. Thank you very much for taking the call live with us here this afternoon.
I hope the next time we meet, the market will have new highs. We can keep our fingers crossed.
All right. Well, I'm with you on that all the way. Steve Forbes, editor-in-chief of Forbes Media, which includes Forbes Magazine, former Republican presidential candidate, author of numerous books. His latest, very timely today, Inflation, What It Is, Why It Is Bad, and How to Fix It. Live with us here, Mottek On Money, 790 KBC. Mottek On Money continues here in just a moment. In fact, right now, we'll be talking about China coming up here shortly with Gordon Chang, China expert and author of numerous books on China. Axel Merck will also be joining us on the economy, the markets, as well as gold and currency. The stock market, meanwhile, saw a pretty strong rebound in the month of May. We've wrapped up the month of May for the Wall Street history books and just seen the best monthly performance for the stock market since 2023 for the S&P 500 and for the NASDAQ. The S&P 500 saw its best month of May since 1990. Stocks ended the month of May with their best gains since 2023 overall as investors dealt with the trade concerns and other uncertainties. The S&P 500 added 6.2% in the month of May, while the NASDAQ surged 9.6% for the month of May. And the S&P 500 had its best month of May since 1990. That goes back, 35 years now? The Dow, by the way, climbed 3.9% on the month. Today, we saw the Dow rebound up 54 points to 42,270. The S&P 500 slipped a half point at 5,912, and the NASDAQ down 62 at 19,114. Gold pulling back, down more than $30 today to 3,313 and change. Silver down 35 cents at 33.08. Keeping an eye on platinum these days, too. It's over 1,000 at 1,053.50, down about 25 and change today. Checking the cryptos now, we see Bitcoin hovering at 104,607, Ethereum at 25.52, and Doge is back down to 19 cents. And now the latest news in 790 KBC. Mottek On Money continues here, 790 KBC. Blizzard of headlines minute by minute this week, and a lot happening on the tariff front, including this afternoon. We're seeing big announcements today by President Trump related to the steel business. Looks like some of the steel stocks have popped in after-hours trading today. We've seen interesting moves in the bond market lately. Gold recently hitting record highs, pulling back a bit today. The stock market having a blockbuster month of May. Let's bring in Axel Merk now, the president and chief investment officer at Merk Investments, also economist, and the Merk Van Eck Gold Trust ETF. He's the author of the book, Sustainable Wealth as well. It sounds like we have the right person on the line here. Axel Merk, thank you very much for taking the call here this afternoon.
Happy Friday. Good to talk to you.
Yes, sir. A lot to talk about. And first of all, give us your reaction to the latest moves in the financial markets this month, with the month of May turning out to be a huge month for the stock market. Gold also hovering at or near record highs. Bond yields moving up and then pulling back. And give us your assessment of what's happening.
My head has mostly been spinning, and I think so it has for many, many investors. I think a few days ago, is it just a day ago or 2 days ago, when this court struck down the tariffs, my world started to change and saying, oh my God, are we undoing everything? And that sort of thing that kind of throws you off balance. And then you start thinking, well, is that going to change the course of the administration? What does it mean long term? And so as an investor, active market participant, you just need to take a deep breath once in a while and think, well, what's going to change? And less than 24 hours later, the verdict goes out. No, not much is going to change. And so it does question, not just for investors, but also for businesses. How can you invest long term in this environment? And it's going to be a huge challenge to convince businesses to invest in the long run. My guess is we'll see many more incentives going forward and less of these the quote unquote punishments through tariffs. But it's a very, very interesting world we live in.
That's for sure. Where do you think bond yields go from that here, given the uncertainty with the tariff announcements on a day-to-day basis? And that seems to be the most important reading we've been getting lately. The yield in the 10-year note moving closer to 5% was big news when the tariffs were paused the first time around, and were big news again in the last week or so.
You're zooming in on the right benchmark. Everything is priced off of the bonds, and the bonds are stubbornly high. That is also why I mentioned this court action to undo the tariffs, which of course was only for a few hours. But in my assessment, when you have tariffs, you change the plumbing of the financial system. Just as you impede the flow of goods, financial flows are impeded, which means deficits are financed more domestically. And that's why after quote-unquote Liberation Day and in anticipation of that, bond yields moved higher. Much less so. Some people said it's the tax bill that's in Congress. I don't think there are many surprises there. I mean, obviously, there are little things in there that might be surprising, but the big issues are not being addressed. No entitlement reform, and none of which was expected. So I don't think that affects the bond markets. It is tariffs that affect it, and it basically means that we need to get our deficits in order because we will have to finance things more domestically. The Federal Reserve cannot do much. Tariffs are a supply shock, and we learned from the pandemic, lowering rates you cannot do when you're faced with supply shock, unless they're convinced that somehow businesses can take that money and run with it. But even if that were the case, institutionally, the Federal Reserve is not structured to look at the data that way. And so they'll be most reluctant to do anything. I think we'll have rates that are stubbornly high. And of course, that's in the context of, amongst others, home prices that are high and are not finding many buyers because people can't afford a mortgage.
On the air live with Axel Merk, who, by the way, was Merk Investments, the Van Eck Merk Gold Trust, ticker symbol OUNZ. You follow the price of gold very closely and hit a record high this year, right now hovering at around 33 or so, 3,300, 13.10 from what I see here, down about 31 today. What do you see ahead for the price of gold here?
Well, what's noteworthy is that a lot of fringe views that the so-called gold bugs used to have are moving more towards the mainstream. And you have folks like Stan Druckenmiller say that Congress is spending money like drunken sailors. Deficits are tremendous. The world has got tariffs, if nothing else, make the world a more expensive place to operate in. The Europeans want to spend a gazillion on infrastructure and military. In the U.S., we might actually get a little bit of fiscal restraint relative to anything else, but still, the overall drive to have fiscal restraint is not there. And in that environment, gold might do well. The one exception of the headlines I saw is, I don't know whether you heard, Denmark is increasing the retirement age to 70. So there's finally a country trying to do something for long-term fiscal sustainability. If you want to get retirement benefits, you need to have a population that supports it. And if the population is shrinking, you need to work longer. So you need to make some tough choices. But most countries are not making the tough choices. And gold is a fairly small market, and you don't need many people to buy gold for it to move higher. Central banks continue to buy, amongst others.
Very interesting. And briefly, we're just about out of time, but what do you see ahead for the dollar? Here's another headline for you. The Russian ruble soaring past 78 versus the dollar to reach a two-year high. That's interesting. And what do you see ahead for the dollar here against the major currencies?
Well, it's not just a two-year high for the ruble. The ruble got my attention as well because it is at the same level as a few years ago before the invasion happened in Ukraine, after obviously the Crimea invasion, but in late 2021. And so the ruble has pretty much recovered, and that's astonishing. Overall, I do think that the dollar will continue to be weak, in part because the dollar, when we talk about it, is mostly relative to the euro, and the Europeans are going to spend over $1 trillion on infrastructure, and is going to suck some investment money into Europe.
Looking for a degree program that rewards you for what you already know? At WGU, all of our bachelor's and master's programs are competency-based, allowing you to progress at your own pace. Washingtonians know how valuable time and money are, and so do we. At WGU, your hard work and experience can help you finish your degree faster and for less. Join a community of driven professionals from across the DMV who are unlocking new career opportunities today. See how your knowledge can give you an edge at wgu.edu.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Let's get inside of Jack Osbourne.
Bands would say Black Sabbath was a huge influence.
And thank God you liked it, boy.
Yeah.
Elijah Wood.
Peter gets on the phone. Elijah, would you like to play the role of Frodo?
Did you cry?
Probably screamed at the top of my lungs.
You play iconic characters, Black Canary and Black Siren. Who would you choose?
Probably Black Siren. She's like, I got this. And that's how Katie Cassidy feels. She's got this.
I like that.
The Inside of You podcast. Follow and listen on your favorite platform.
And so that's going to be a headwind to the dollar.
Axel, thank you very much for taking the call here this afternoon. We always appreciate it. That is Axel Merk, President and Chief Investment Officer of Merk Investments, which includes the Van Eck Merk Gold Trust, ticker symbol OUNZ. He's author of the book Sustainable Wealth. Axel, thank you very much for taking the call here this afternoon.
My pleasure.
Out to the freeways now we go, 790 KBC. Frank Mottek back with you here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and, yes, silver. Give my friends at United Gold Group a call right now. The number is 1-800-753-8534. Mention Mottek and you could get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues, 790 KBC. President Trump declaring China has totally violated its agreement against the U.S. on trade just a couple of weeks after the two countries reached a tentative deal, raising concerns now that the trade war will continue to rattle the global economy. President Trump holding a rally today at a U.S. steel facility, announcing additional tariffs on steel imports. The president announcing plans to double tariffs on imported steel to 50%. Following all these developments, moment by moment, with us here as well is China expert Gordon Chang, Gatestone Institute senior fellow and author of numerous books on China, including his latest, Plan Red, China's Project to Destroy America. You can find him on X at Gordon G. Chang. Gordon Chang, thanks very much for taking the call and give us your reaction to the latest breaking news here this afternoon.
With regard to President Trump saying that the Chinese violated the May 12th tariff agreement, he certainly is correct, because in that agreement, China agreed to remove all non-tariff barriers that have been put into place after April 2nd, which was Liberation Day. In Geneva that weekend, the Chinese and American negotiators specifically discussed the export ban on rare earths that China had imposed on U.S. purchasers. So China clearly violated the agreement. President Trump had to do something, and so I'm glad that he talked about it today in his posting. And with regard to U.S. Steel, we need to build up our steel industry. We are not in peacetime. We are on the edge, I think, of some very bad outcomes. We need to be able to make steel in America.
Were we dependent on China for steel for many years?
Well, we have. We bought enormous amounts of steel from China, including the Bay Bridge in San Francisco, if I remember correctly. So, yes, we have allowed the Chinese to flood our markets with its steel, and we can't permit that anymore, especially because China has declared itself to be an enemy of the United States, and we've got to start listening to their propaganda.
On there live with China expert Gordon Chang, and certainly Japan, a close ally of the United States. How do you think China is viewing this this connection between Nippon Steel and U.S. Steel, with all the facilities run by U.S. Steel expected to be fully operational here?
I think Beijing is very worried about any economic links between Japan and the United States, because China would like to make sure that Japan moves as far away from Washington as possible. So I don't think that they in Beijing were very happy about this President Trump's approval of the tie-up with U.S. Steel.
All right, another on the tech front, of course, you're following this as well. You might have seen the report that from the South China Morning Post, by the way, with the headline, Chinese economist warned that financial sanctions could become new U.S.-China battleground regarding financial sanctions and transactions and so forth. What do we make of this?
Well, the United States is imposing all sorts of sanctions on China, not only financial ones. And we need to do that because we've got to recognize that China's been engaged in malicious behavior against the United States. For decades, we've ignored what Beijing has been doing. So I'm glad that the Trump administration is starting to impose those costs. Long overdue.
All right, and you follow what's happening with Russia and Ukraine, of course, and what appears to be a stepping up of military action. What's China's connection to these latest developments?
China has supported Russia almost across the board from the very beginning of this, greenlighting Russia's invasion of Ukraine with their joint statement on no limits partnership, but also financial, economic, banking, propaganda support, diplomatic support. It's just been across the board. So Beijing believes that Vladimir Putin is accomplishing China's purposes of disrupting the international system.
It looks like the pieces on the chessboard are moving around. North Korean troops involved on Russia's side against Ukraine, right? And now, for the first time since World War II, German troops will be stationed outside of Germany in Lithuania. What do you see happening here?
Well, there's also Chinese troops on the Ukraine battlefield as well. There are mercenaries, but there are also troops from the People's Liberation Army that are on Russia's side. So we are going to find that Ukraine is going to be the test of the Western democracies. We don't want that to be the case, but I believe that it is. And so there will be more American involvement. There'll be more Western European involvement in the war.
All right. Certainly tariffs will be a continuing conversation point next week. What do you expect to happen after this 90-day period winds down here on this tariff pause here between the U.S. And China?
Well, there's going to be a lot of turbulence when Trump imposes additional costs on China. China's made it very clear they do not want to come to a deal within the 90-day period. That's what their propaganda has been saying. They're trying to drag their feet. So this is going to get ugly, but it needs to, because for far too long we've allowed China to get away with the
Gordon Chang, thank you very much for taking the call here. Gordon Chang, China expert, Gatestone Institute senior fellow, author of numerous books. His latest is Plan Red, China's project to destroy America. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 Monday afternoon right here. Mottek On Money on 790 KBC.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Will Wheaton is here.
I'm getting ready to do this podcast. I text my Star Trek family. That is a supernatural impulse.
If you're here for Jay Moore, you found the right place.
Have you always had a large personality?
The nicest way anybody's ever put it.
You always warn people out.
From Twilight, Ashley Green.
We were just like, no one's going to see this. This is not going to be a good movie.
I really love the movie.
Don't feel bad.
The Inside of You podcast. Follow and listen on your favorite platform.